Alibaba is expected to report results on May 26th, which is this coming Thursday before market open. And lots of investors are expecting continued bad results. But in this video, I'm going to preview the Q4 results and explain why I think there's a lot of good on the horizon. So smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up, guys, and welcome back to the channel, where the goal here is to help at least 1,000 people achieve financial independence much sooner. And let's dive right into it. So you can see here that Alibaba is expected to announce March quarter 2022 and full fiscal year 2022 results on May 26th, which is before US market opens on Thursday, May 26, 2022. So that's this coming Thursday. Now, what I'm hoping to do is have a first look done before market open. However, we'll see how much time I have. By the end of the day, for sure, I'll have that first look out. Now, moving on, you can see here that similar to last year, owning Alibaba has just been absolutely painful. By being down to $86 per share, it's now down 30% year to date. Brutal. But I think a lot of the reason for that is because a lot of people are buying into all of the bad news and not really considering any of the good news that's coming out as well. Now, if you guys have been following this channel for any length of time now, you know that the majority of my videos that I put out on China or Alibaba or things that impact Alibaba have been negative as of late. However, like I always like to say, I'm not a cheerleader for the company, nor am I a detractor of the company. Although I've been largely negative on Alibaba because of the macroeconomic environment, I have doubled down on the security, which I have shown to you guys in a previous video. And the reason why I've doubled down is because I'm starting to see some of that good news trickle in. So let's go into that. So the first one, which you can see in this article here, is that lockdowns that are aimed at ending the coup are throttling economic activity. And the second economic issue that's impacting the country is that overseas demand for Chinese exports is fading as economies wrestle with surging prices and rising interest rates. And the effects of China's slowdown are showing up everywhere. I mean, it takes over 6 weeks to get a cell phone now. So you can see how strained those supply chain constraints are right now. And so let's start with that first economic challenge. You can see here that Shanghai COVID lockdowns have gotten tougher. If one person tests positive, the whole building isolates. Now, this is an article that was put out on May 10th. I'm not sure if they're still following these policies, but all the news that has been coming out has seemed like it's continuing on with this strategy. Now, Shanghai authorities are again tightening COVID-19 restrictions amid a renewed push by the central government's officials to eradicate the virus. And they have expanded the scope of people being taken into centralized quarantine while simultaneously cutting off deliveries of non-essentials to swaths of the cities. My question is, one, who decides what's non-essential? And two, if they are cutting off deliveries of non-essentials to the city, that absolutely crushes the economic activity. So that means that we should expect a tough Q4 for Alibaba. And this article goes on to state that despite the steady decline of infections, Shanghai authorities tighter measures appear to be a response to a renewed push by senior Communist Party officials in Beijing to smother any traces of the highly transmittable new variant. And my question is if the goal is to smother any new cases, is China pursuing a policy of indefinite lockdown? Now, early in the year, we thought that this would be over very quickly. Now it's starting to look like it's going to stick around for a long time. Does it last for all of 2022? A lot of us feel like it is, and that's a big challenge, especially in light of rising interest rates, which are slowing down the global economy, which will absolutely impact the world's manufacturing hub. So I don't know what their solution is for zero COVID, but waiting until they have absolutely no new infections is likely not the best solution in my opinion. Now, moving on, looking at the economic impacts, you can see that China's trade has slowed as demand dropped and COVID-19 lockdowns have hit supply chains. China is experiencing the weakest export growth in almost 2 years, which reflects the impact of inflation on foreign customers. People are just buying less. And that's something that's been stated by Walmart. It's being stated by Target. It's being stated by Amazon. We're seeing it all over the place right now. And this article goes on to state that China's trade with the rest of the world withered in April under pressure from their lockdowns and sagging demand from overseas, signaling the global economy is losing steam as high inflation eats into consumer spending. So once again, if you have a weaker global consumer, you're gonna have a weaker domestic economy in China, and that's what we're seeing now. So once again, that is bad news for the quarter for Alibaba. But what does it look like going forward? Are people reinvesting into the economy? Well, it's not that great news because surveys of managers in the services and manufacturing sectors have shown that more than half have delayed or reduced investment in China in response to the latest outbreaks. So there's a very pessimistic response to investing further into the economy. This is not looking good. So that's the bad news, but all the bad news seems to be medium term in nature. However, the one that I would be a little bit scared of is a prolonged global market slowdown. We'll see if that happens, but despite that, you can see here that Alibaba is the #1 most undervalued security in the tracker that the Patreons have access to. You can see that at $87 per share and a $200 billion market cap, Alibaba's share price to its intrinsic value is sitting at around 30%. And even if I bring down that intrinsic value, which I think I will, once they release Q4 results, it's still going to be well under 50%. Now, here's something that a lot of people aren't paying attention to. Alibaba continues to focus in on their strategies that they provided to us in their Alibaba Investor Day. Their Taobao Deals app is continuing to grow. And this article forgets to mention that Taobao is also another small but developing business. So this article goes in to say that Morgan Stanley estimates that consumption in China's lower tier cities, which is what Taobao Deals and Taobao are focused on, is expected to surge from 2.3 trillion in 2017 to 6.9 trillion in 2030. Chinese GDP is still expected to grow despite the current headwinds both domestically and globally. And Alibaba's leaned in and said that they are learning from Pinduoduo, but we're building Taobao Deals with Alibaba's logistics network. And so Alibaba has gone on the offensive as they said that they would on their investor day. Now here's the thing. The issue that Pinduoduo has had is that they have a great app. Lots of people like to use it. It grew really fast, but delivery and execution has not been the best. Well, Alibaba has a secret weapon. They have the Sinyao Logistics Network. So Alibaba, in their investor day, told us that they expect to make those deliveries for these rural markets by next day, which is absolutely something that other online providers cannot compete with, at least not right now. Now, the other thing that I do want to point out is that this app, Taobao Deals, gives out coupons to shoppers, which subsidizes prices for companies that want access to shoppers in these lower tier cities without lowering prices. So my question is, why does an in-app coupon system matter? Well, you can see here that nearly all Hong Kong residents in February of 2022 received $10,000 in e-vouchers. Now, my question is, if the government is going to continue to pursue a policy of supporting the consumer and merchants by giving out vouchers, does Taobao Deals have the ability to use these vouchers on their systems? I absolutely think so. Now, here's the way that the Chinese government can help out not just the consumer, but also their small agricultural farmers by allowing these vouchers to be cashed on sort of like the Taobao Deals app and the Pinduoduo apps. So what you're seeing here is the potential of heavy support from the CCP, which is already enabled on the Alibaba online merchant network. But that's a little bit speculative. We'll see how it comes down. Even if the networks aren't really enabled to take on Chinese government vouchers, the vouchers will still end up working in one way or another. So it comes down to how much lower can this stock go if it's already trading at $80 per share. And almost everyone's valuation is north of 200. So it's kind of crazy that it's trading so low. And I've already explained to you guys that something around like $40 or $50 is already cash and short-term investments. So that's really supporting the share price. But what exactly is the valuation? Well, you can see here that with a multiple of 20 times earnings, this company is valued currently at $300 per share. And so you can see that net cash and short-term investments is $30 per share, and their equity securities and other investments are $15 per share. So I actually stand corrected. The shares and equity that they have on their balance sheet amount to around $45 per share, so somewhere around there. Even if you want to get rid of the equity securities and other investments, it's still $30 per share that's supporting the share price here of $80 per share. So what I'm effectively trying to say is that this company, I believe, is currently trading below its liquidation value. And so the downside risk is substantially lower than its upside potential. And so now's probably the time where I'm going to start thinking about even tripling down. So if these shares go under $70 per share, I'm probably going to triple down. So we'll see if that happens. But Alibaba's not the only game in town. You can see here from our tracker that the Patreons have access to, there are 6 names in the tracker right now that are trading at under 50% of their intrinsic value. And if you look closely, 4 of those 6 names are companies that have low or no debt. And in a rising interest rate environment, that's exactly what you want. And you notice that there's a record number of companies approaching 50% of their intrinsic value. So you can see that range from 51.1 down to 71.5. And of those companies, greater than 50% have no debt, which is perfect for a rising rate environment. We like to look at other elements of risk in the tracker. The tracker has other items that we look out for because there's risks coming from everywhere right now, and we want to focus on higher quality names at prices that are under 50% of their intrinsic value, because I truly believe that there's quality companies whose shares are being oversold right now in this environment. And the other thing that I want to show to you here is one name that almost everyone can agree with that's being oversold is Alphabet. It's trading at very close to 50% of its intrinsic value. And here's a company with the digital ad space, especially focused on search. They have a greater than 90% market share advantage here. So this is a business that is exceptionally sustainable, cash flow positive, cash flow generating, that's trading at almost 50% of its intrinsic value. I understand that there's some headwinds, there's some legislative risk right now happening with Alphabet, but it's not something that I'm super worried about. Now, the other thing that I want to point out is that more than half of the people that watch this channel are not subscribed. Now, here's the thing. It's really important for you guys to be subscribed and hitting that notification bell right now, because I have a couple of new important videos that are coming out. The first one is that I'm going to make a brand new Alibaba model, and this is the thumbnail for that video, and you want to be able to have access to that video as soon as it's released. So please smash that subscribe button and ring that notification bell to be notified when that video comes out. The second video that you're going to be very interested in is the Alibaba Q4 results first look. That is absolutely going to come out this Thursday when they release results. And so in order for you to not miss that video, please once again hit that subscribe button and ring that notification bell. It's something like 30 or 40% of you who are subscribed have rung that notification bell, and that is a testament to me of how valuable you think the content here is on this channel. So thank you very much. And of course, guys, if you want access to the tracker and the individual detailed models for all of the companies that are listed there that come along with the tracker, because you can click right into them, please subscribe to the Patreon at the $5 per level tier. And once again, like I always say, it doesn't even charge you until after the first 30 days. So if you cancel within the first 30 days, you completely get your money back essentially. And a testament to how great of a value this is, most people actually end up increasing their subscription to that $15 a month tier, which is the call tier, as opposed to canceling. So that to me shows how much value people are getting out of this. Now, the other thing that I want to point out is that the Chinese economy is not the only economy that's slowing down. Walmart and Target had a really tough week this past week. And my question is, did Target's results signal a potential impending recession? Well, I cover that right here.